The law dictates management's responsibility for providing stewardship information to external parties, and this reporting obligation is met via financial reporting system. The primary recipients of financial statement information are external users, such as stockholders, creditors, and government agencies. Generally speaking, outside users of information are interested in the performance of the organization as a whole. Therefore, they require information that allows them to observe trends in performance over time and to make comparisons between different organizations. Given the nature of these needs, financial reporting information must be prepared and presented by all organizations in a manner that is generally accepted and understood by external users. It is presumed that users of financial reports understand the conventions and accounting principles that are applied and that the statements have information content that is useful. Financial reporting is the final step in the overall accounting process that begins in the transaction cycles. The process begins with a clean slate at the start of a new fiscal year. Only the balance sheet or the permanent accounts are carried forward from the previous year. So here are the following steps as shown in the illustration. First, the capture of the transaction. Within each transaction cycle, transactions are recorded in the appropriate transaction file. Second, record in a special journal. Each transaction is entered into the journal. Recall that frequently occurring classes of transactions, such as sales, are captured in journals. Those that occur infrequently are recorded in the general journal or directly on a journal voucher. Third is post to subsidiary ledger. The details of each transaction are posted to the affected subsidiary accounts. Next is post to general ledger. Periodically, journal vouchers summarizing the entries made to the special journals and subsidiary journals, or should I say subsidiary ledgers, and are prepared and posted to the general ledger accounts. The frequency of updates to the general ledger will be determined by the degree of system integration. So next with that is to prepare the unadjusted trial balance. At the end of the accounting period, the ending balance of each account in the general ledger is placed in a worksheet and evaluated in total for debit-credit equality. And the sixth step is to make adjusting entries. Adjusting entries are made to the worksheet to correct errors and to reflect unrecorded transactions during the period, such as depreciation. Next is journalize and post adjusting entries. Journal vouchers for the adjusting entries are prepared and posted to the appropriated accounts in the general ledger. And the eighth step is prepare the adjusted trial balance. From the adjusted balances, a trial balance is prepared that contains all the entries that should be reflected in the financial statement. Next is to prepare the financial statements. The balance sheet, income statement, and a statement of cash flows are prepared using the adjusted trial balance. And the 10th step is to journalize and post the closing entries. Journal vouchers are prepared for entries that close out the income statement or the temporary accounts and transfer the income or loss to retained earnings. Finally, these entries are posted to the general ledger. And lastly, to prepare the post-closing trial balance. A trial balance worksheet containing only the balance sheet accounts may now be prepared to indicate the balances being carried forward to the next accounting period. So as you can see here, this is already done in our auditing theory subject. So the periodic nature of financial reporting in most organizations establishes it as a batch process. This often is the case for larger organizations with multiple streams of revenue and expense transactions that need to be reconciled before being posted to the general ledger. So, however, because of our modern generation, the illustration here shows a financial reporting system using a combination of batch and real-time computer technology, whereas many organizations have moved to this real-time general ledger updates and financial reporting system that produce financial statements on short notice. So, yun lang po.